Welcome to another episode of Rawstocks. This is Rustic. We're going to take a look at Tesla's chart, see where price came from, where price is, and where price might be likely to go. A lot of excitement in the market today. Can barely contain myself. It was a super exciting day. A lot of thrilling moves, a lot of up and down with the FOMC. Jay Powell came out. He said some things. The market moved, and we're going to go ahead and look at what exactly happened. So first we're going to start on the daily chart for Tesla. Okay, something that stands out immediately is we have a bearish engulfing candle from the day before, right? We have some of the levels drawn out from some of the previous videos. Okay, and we're coming from this high that was on this trend line, and we've been trending lower since. So those are some things that stand out just immediately looking at the chart. Some of the things that happened today as we drop down into the lower time frames, we'll go ahead and show you, but ultimately what happened is that we took out a lot of the upside targets that we had that were immediate, and we have this trend line of support that we've been talking about, and we said it was tested here with this consequent encroachment of a one-day bullish fair value gap. Tested and rejected. Today we've dropped slightly below that trend line. Okay, so that's an important thing that we want to be watching. We have not tested this low again, but we are currently trading below that trend line. So very important. It is within, margin that it's pretty close. So not necessarily saying that it couldn't be a false breakdown and that we head higher, but it definitely was something that was interesting that happened today. Okay, we have a lot of downside targets. We have some upside targets, but with the apex of this triangle, what we talked about was that sometime this week, right? Because we had, starting yesterday when we were talking about this, we have 1, 2, 3, 4, potentially 4 or 5 before we get to the very point of the apex of the triangle. But because of the way Tesla moves, it's not likely to go till Monday or Tuesday of next week before that breakout occurs or that breakdown occurs, right? So we might be starting to see the early phases of that breakdown happening. Be interested to see what happens tomorrow. See if we want to push even lower, confirm that breakdown, could eventually see it try to back test that trend line and see if it wants to act as resistance after it previously was support. Okay, let's go ahead and look at the 1 hour chart. But one last thing I do want to reference in this daily candle is this wick. Okay, because remember what we said back here on this wick is that it would be liquidity. This was coming out of the options expiration week right here. And we said this wick holds a lot of liquidity, a lot of orders that didn't get filled. So price ran up, took that liquidity, those orders got filled. Whoever was trying to go short in here got them filled throughout the next 3 days. I have referenced that I do believe that smart money and big money has transitioned to go short right around here during that options expiration. So we could see if over the next 3 months or less that we want to see price push down if that's true. If big money, institutional orders, smart money, all that, if it wanted to go short here, we're probably going to see this head much lower. So we'll have to see whether those are, if they're 1 month swings, if they're quarterly swings. We'll have to see. Oftentimes with those expiration, you got repositioning, and it's either to the upside or the downside, right? So if smart money and big money was repositioning here to the downside, that's why these orders might have gotten filled. We're pushing down. So what do we have? We have another large daily wick. Okay, a lot of orders are in here that might have wanted to get short, and when we rapidly fell after the FOMC meeting and the press report, we might see price push back up into this at some point in time, and it could be after this, trend line is, confirmed that we're heading lower, then we trade back up, right? We do have, and I'll show you when we get down to that chart, we have a 1 minute unbalanced price range. We could see that head up quickly, try to take it head lower, but there are orders here, and these are, potentially short orders that didn't get filled. So it wouldn't be unreasonable to think that price wants to go up into that wick just like it did here, especially if it's institutional order flow, that we'll see price run up into this wick somewhere, and then we could potentially see more downside from there. So we're watching carefully. We haven't broken these relative equal lows here, and so that will be the next target as we head lower to balance this 15-minute unbalanced price range, this consequent encroachment of a 1-hour fair value gap, and then we have a 1-day fair value gap, which is where we chopped around in here. Okay, so let's go ahead and drop down into a lower time frame and see what else is going on. We got the 1-hour time frame, right? So today's price action on the 20th. Okay, we kind of came down. We saw that run up right before. We saw that run up right before the run up to the FOMC meeting, right? That's what that move was right there. And what I think is that retail started buying, thinking that the meeting, front running the meeting, started buying. I think you saw FOMO kick in. People thought, oh, we're going to break out. We're going to run. We're going to go to 280. We're going to break out of this, this triangle pattern, and the release came out. I wouldn't say it was bullish or bearish. I think it's exactly what was kind of expected, that there could be another rate hike in the future. We're pausing the rate hike for this month and continuing to assess, the different things that are going on in the economy, right? But I think retail was front running this, and market makers, institutions, they say, we'll just let them run it. And what happened? They slapped it down, right? With force. Slapping it down to break that trend line, right? So on the daily, it didn't look like it broke by much. On the hourly, it looks like it broke a little bit more. Again, there's that unbalanced price range on the 1 minute. Again, we have those downside targets, okay? So we'll be interested to see if price wants to rally back into this triangle. Sometimes that happens. Sometimes price does rally back into a pattern and then eventually, makes another decision to move up or down. So it could be a fake out, could be a false break. It would look like that if we were heading up to the 1 minute unbalanced price range, right? What if tomorrow we open, boom, we head there, we're back in the triangle? What do you think retail thinks if we're back in the triangle? Here we go, we're heading to a breakout, right? We're back in the pattern. False breakout. Well, maybe not, right? Maybe the move is to balance the price range, right? We want to see the algorithm balance the price range so that it's not left as an upside target if we want to head lower. Okay, so that could be a possibility over the next 2 days, maybe even into next week, depending if we head lower first, that we come back for that unbalanced price range before we potentially drop lower. Okay, something to be paying attention to. Let's go ahead and drop into a 15-minute chart and see what the 15-minute chart says. Okay, you guys see I don't have my smart money indicator on today. I'm just going off of levels. But often I use the smart money indicator while I'm trading, especially if I'm helping other traders who are trying to follow my charting and my analysis. Okay, so again, today, the 20th, same kind of deal. Kind of chopped. We traded up. There were some good trades in there. Could have grabbed this wick and gone short here. There was a good short entry. You could have grabbed up here and gone short, right? Another one. This was just playing the chop. That's all we were doing here. Once price got moving, and I'll be the first to admit, I entered a put somewhere around here. I cashed out some of them, and I left some runners. Okay, and when we broke this, and this candle here, this 15-minute candle just exploded. My put was upside down. My runners were way deep in the red. But what I knew is there was some upside targets that I was looking at, primarily this volume imbalance here. Okay, and there was right here, an unbalanced price range from when this low got taken by this move here. Okay, there was a change of character. We had it labeled out in our chart, so I've deleted it since it hit. But you can see price ran up into it, balanced the price range, took out this volume imbalance, right? It didn't take out the gap because the gap technically starts in this candle at the high to the opening of this candle. So that gap is technically still open. But I told you guys in the video, we're going to look at the volume imbalance, okay? Right here. I'm going to even mark it off for you guys because we referenced it yesterday. Okay, right here. Look at that. Hit it by the wick. Came back and hit it by the wick again. Okay, we said we don't care if it comes up to this gap. We're going to target the imbalance. And this is why we do that. Chopped around in the range. If you grabbed a short here, great. I was still running my puts that were underwater. But what I knew is that when we were targeting these, I'm going to mark the imbalance or the break of structure too, or the change of character somewhere right here. Okay, I said we had this imbalance and we had this unbalanced price range. And when we took those all in one move, it seemed a lot like retail was the one who was buying. And especially if my theory holds true that institutions went short when they adjusted and restructured their portfolios during option expiration, okay, that anytime retail is going to let the price run, institutions are going to slap it back down. Market makers are going to slap it back down, right? That's the business they're in. Okay, so I'm going to delete those, just showing that we did exactly what we talked about in the video, that if we headed into those, that was all we were targeting besides this resistance line. Not likely we were heading up here. Okay, so where could we be heading now, right? Again, very clearly on the 15-minute, this candle had a big breakdown. We even kind of tested it with this wick to come back and see. Let's see if we want to come back and try to fill this. What could also happen is if this kind of does a move, I'm going to show you what a move might look like, right? What if we come down and we do something like this and we wait a little while to balance that price range? It's outside, but it's back testing, okay, the balanced price range. So it doesn't ever have to get back in that candle. If we head lower first, we could back test it without getting in that pattern, and it would be a back test on that support line that could become a resistance line. Okay, if we were to run up and test it right away, again, it could be a false signal that we're heading back into the triangle. We could even head higher. You never know. Take some of this liquidity, test that line and come lower, or even head higher. It just depends on what the play is and what big money's doing, right? But I think that regardless, we're heading lower to take out the unbalanced price range, the consequent encroachment, potentially trading back into this fair value gap. Whether we go lower than that or not, I'm not really sure. We'll see when we get there. But I do think we might end up back here. There was a lot of chop and consolidation in this range. Be likely that it'd come back into that range, fill this gap here, and then make a decision whether price wanted to head higher or lower. I know seasonality. September is often, not a great month in the end of the month, and we're starting to see evidence that that's happening this month as well. We also have earnings coming up, I believe, next month. So things that are on the table that could certainly get the market moving in one direction to another. What I do anticipate, and I won't know this until I see price happening day to day, but what I do anticipate is we see moderate sell-off through September, and then sometime in October, we do see price start to run back up with anticipation of earnings. So let's see what that looks like as it happens. I don't like to predict too much just because the market can go up, the market can go down, and we never really know. That's why I trade price action and structure on the intraday charts, typically 1 minute. Let's go ahead and drop down to the 5-minute. There's nothing that we didn't already talk about, but just more, a look at the structure. Okay. When market opened, some of you guys that follow me on Discord, I said, let the market settle a little bit and see what happens. Right, so we ran down, we ran up, we chopped around. We did talk about sometimes. I posted some pictures, I think on my Twitter and in the Discord about, the previous FOMC meetings. Sometimes price, runs, sometimes price chops, but oftentimes leading up to the meeting, it does tend to start to run up with anticipation. And so what did we do? We kind of ran up, but we chopped around ultimately in this range. I'll mark it out for you. Even though it looks like it was heading up, it really wasn't exactly. Right? So price opened today. We had this chop range, okay? And then even extending it out further. right? We chopped here, and then as soon as that meeting was about to kick off, boom, just went running. Okay, it did get a little dicey. Again, 5 minute, we got some liquidity in this wick, but what do? We came back and took some of that liquidity with this move up, and then bam, we just straight sold off. This sell-off came really about the end of the meeting, which is where the moves often happen, because if retail was the one buying this, then it dropped and they said buy the dip, right? We're going higher. Bought the dip, got slapped back down right at the same level. So this 273 is an important zone to mark off as a zone where price rejected twice, right? And around there, it rejected some more. So an important level that we want to watch. If price does break above that, we could potentially expect a run to higher levels. But right now, we have this kind of falling knife, right? Drop down, ended here, didn't close below this low of this wick, which was the test of that support. But because the support is going up, we broke it this time, very close to the consequent encroachment of that 1-day fair value gap, consequent encroachment of the 1 hour. So if we start falling, again, talked about what a rebound would look like, potentially up to the balanced price range. If it takes longer to get there, we could see it coming back up here. Either way, I would expect a return at some point in time to 270, and it'll be a nice run if you can catch that. And we'll look at the 1-minute chart just for fun, because this is what I primarily trade. We're looking at today's price action again. Same thing I just talked about, right? Had a lot of chop here. All of that. I got caught over here, or I took a trade here and I exited, and I had some runners and I got caught, right? Went up. Ultimately, I ended up getting to sell down here, and so I ended up turning a profit on that position, but certainly was sweating it as these moves were happening. I wouldn't have probably held that position if it wasn't, if it was further along in the week, but because it was Wednesday and it was FOMC, I did feel confident in holding that trade a little bit longer and was willing to swing it just because of those levels being hit to the upside, that balanced price range, right? So what are we looking at tomorrow? Again, we could start trading down further. We could come back to balanced price range and then head lower. So those are all the things I'm looking for. And I hope this content has been helpful for you guys. I know there's a lot of people who have given me a lot of positive feedback. Please like and subscribe and drop a comment. If there's anything you want me to cover, any questions you have, anything about the indicators, or if you want to comment on specific lessons, I'm going to start doing some lessons as far as educational content goes. And so be on the lookout for that as we start to release that. All right, guys, we'll look forward to talking to you guys tomorrow. And thanks again for all the support.